Hello, it's Joel Crane here, Investor Relations from Cobalt Blue. We're a company developing the Broken Hill Cobalt project, which will be a 3,500 ton integrated mine and refinery in the heart of Australia, Broken Hill in New South Wales.
Joel, good to have you on board. You're joining us for this contrarian week, and we're going to discuss contrarian investing. But I've got to ask, the first question is, you guys seem to have petered out as far as the share price is concerned, pretty flat. So has all the growth gone? Has all the upside gone? I mean, why should people invest in your company?
Oh, look, not really sure I would describe it as petering out. I think our stock price profile looks very similar to so many other asset classes. I mean, I think that the macro environment, and I don't think anyone would disagree, is really the primary contributor to our sell-off as well as the sectors. Look, we're all familiar with the reasons. We can cite them and talk about them all day: rising interest rates, higher cost of living, falling asset values, and look, the cyclical sectors generally get unloved during this period, and I don't think we're any different. I think we also, it seems like the conversation's drifted a long way away from one of the primary drivers of commodity markets. That's, of course, China. Commodity world is still China-centric. And everyone's been waiting for the next round of stimulus, which just hasn't really come yet. So I think there's a lot of disappointment priced into a lot of these valuations. And look, Matthew, I'm not going to stand here and try and pick the cycle, but with so many valuations getting close to annual lows, I think there's definitely something to be said for looking at a good time to pick up exposure.
Well, okay. Well, there's the rub of it, right? Which is, how do people identify companies which, where they can get some of this exposure to some of this growth in the future? You talked about, China and stimuluses, and that's sort of stuff out of your control. So how do you remain in control of your own destiny?
Well, I think for us and probably a lot of other companies, all we can do is, control what we can control. And for us, that's just on the operational side. And so, we're full bore, all hands on deck running a demonstration plant, and we're getting all sorts of encouraging results. So we like to just, whenever we can, try and make sure the market's updated on what exactly is happening. I think this is a good opportunity to do that. So I appreciate that. And I guess that's how you pick the winning companies is ones that are working hard and spending the time when they can to really build up what you've already invested in. So for us, what we've been doing is just we're in the midst of our DFS and basically having the opportunity to prove the Broken Hill Cobalt project will be an economic viable project. And we're getting results pretty much every day that are showing that. Luckily, these results are in line with what we had put out in our previous studies. So for instance, in the past month, we've demonstrated that we can upgrade our ore from the deposit, which has an average grade of around 600 to 700 ppm, to a sulfide concentrate with an average of about 4,500 ppm. And what that does is that's through rejecting about 75 to 80% of the ore's mass, and then we place that directly onto the dry stack. And that's really important when you're trying to prove up an economically viable project, because 2/3 of the cash cost for our project occurs beyond the concentration steps towards the final product. And so what that means is that only 1/5 of the mass is now involved in the product, and that's what keeps our costs down. So that's just a really important fundamental that we talked about 2 years ago, and now being able to prove it up.
Okay, so that's interesting in terms of your cost controls, or in terms of a percentage of your cost controls being reduced. But what's that actually mean in market terms? Because if you again come back to that point, if you're waiting for stimulus, you're waiting for China to do their thing, you're slightly out of control there. So what are the options available to you when you're going through this demo phase at the moment? Are you opening up new markets? Are you having new conversations? Are you having conversations with industry partners as well as investors?
All of the above, yeah. It really is, in some ways, great timing that a number of sort of factors will come in. I'm sure you and many of your listeners have spent a lot of time talking about the recent legislation all around the world that's supporting this sector and improving battery supply chains. Of course, talking about the IRA in the U.S.
The what?
Things have been happening.
The IRA? What's that?
It's very, very poorly named. I'm waiting for someone to come up with something a little bit better.
Right.
But yes, the Inflation Reduction Act, which many people say is actually sort of a misnomer, given that it may actually raise inflation in the end. But for us, I think we're pretty familiar with the important parts of that legislation that are really aimed at localizing critical minerals markets. That's been a concept for a long time, particularly in the US, but now this type of legislation makes it a requirement. And that's just super important for developing companies like us, because where we sit in the fortunate jurisdiction of a mining-friendly part of Australia. Of course, Australia itself is generally quite mining-friendly, but to be in that FTA-friendly list with the US, or as I've heard it recently quipped, and I quite like, friend-shoring. So instead of just onshoring your own domestic supply chains, you're actually just trying to internationalize that supply chain, the battery market supply chain.
Friend-shoring. I've heard it all now.
Yeah.
Right. Okay. Look, but let's come back from investors' perspective and look at this, because right, there's not too many cobalt, well, sort of ex-DRC or even ex-China more broadly, cobalt companies that I can look to. You've given us a sense of in the past about the market dynamics. Has anything changed there? Because we're hearing a lot of change of design in batteries and use cases and so forth. Is the market outlook any different?
Not really. I mean, if anything, the market just keeps upgrading demand. Sure, the battery chemistry and technology outlook is constantly changing. Anyone who's looked at the sector closely knows that there has been a lot of talk around trying to thrift cobalt and nickel, which are obviously have very volatile and unpredictable price cycles, out of a battery. Certainly that's occurred. We've talked about it on this interview before, and that's just all part of a evolution of a sector in its infancy. So places like China, in particular China, and other places with high density where range for batteries is not an issue. They're able to thrift these expensive commodities out and come up with cheaper alternatives, but they're less efficient, more heavy, but they are cheaper. So you can offer those cheaper models. And look, I think that's only natural. But at the same time, the demand for cobalt and nickel and these battery chemistries is only expanding every day, and the market keeps upgrading that.
Right. Okay. So the demand side of thing is still there. So I've got to come back to you as the company. Why should I be putting money in now? You're sitting at 68 cents today. I think the 12-month high is like 108. Why don't I just wait? Has this thing bottomed? Is there more money to be made?
Look, I'm not going to, like I said at the beginning, I'm not going to try and pick the cycle, Matthew, or when the price of a commodity and or equity evaluations will bottom. But look, we're at a very interesting stage where some people are choosing to take exposure and obviously some are not. And that stage is where we're, like I said, about a third to halfway through our DFS, and that's ongoing and that's taking a long time. And we're not funded. So I think the market is still valuing us as a developer as opposed to a company with a revenue, because ours is still 3 to 4 years away. But I guess, and what we try and do is update the company through our ASX announcements and the photos and everything on our website that it's all happening. We have 3 contractors hired, 3 of the biggest names in Australia, which is Worley, GHD, and SKR, that are helping us with our DFS. And they're constantly on site, and so the final study will be done about the third quarter next year. But until then, I think you're just going to have this. Like I said, the market's valuing us like a developer as opposed to a miner.
Right, so you're 12 months away from the DFS coming out. Obviously, in this sort of inflationary environment, or it'd be interesting to sort of see if prices sustain, drop, or go up. I'm not sure too many people have an idea, because the oil market is concerning, I guess, at the moment. But once you do have those numbers, it's all good. And obviously most people will be aware of the Lassonde curve. You would expect to get some kind of reaction with the DFS there. But have you got the money to get yourself through there? Will you be raising capital? Will there be some sort of dilution reaction?
Oh no, look, we're fully funded through DFS with about 9 million in the bank all the way through the next year. And we also received a grant from the Australian Critical Mineral Office in the tune of $15 million that specifically goes to that DFS. So we're well funded for that, which is good because we have invested a lot in this demonstration project, and it's really starting to pay dividends as we are able to prove what we were talked about in the PFS 2 years ago. Things like, are we consuming too much energy? What are the reagents look like? And is it going to create the product that we've been talking about, which is cobalt, MHP, and or sulfate?
Right, but are there any moments between now and 12 months' time? Okay, because I've got to work out whether I place bets now or whether I hold off. Right, as a contrarian investor, I want to buy in at the lowest possible point, and capture all of those gains on the upside. So, for instance, conversations with strategic partners, we've talked in the past with yourself and Joe, pointing towards Europe. Pre-DFS is an interesting period because sometimes you can find yourself a partner. With maybe sometimes companies need to, but it's also quite an interesting time to have those conversations and get someone on board. Or maybe there's a better deal to be done after the DFS. But do you feel that you need some catalyst moments between now and Q3 next year?
I don't think it's required. Certainly, we'd like to have them, and that's why we're constantly updating the market on what's happening on the ground with our demonstration project that's up and running 24/7 shifts at the moment. But without being able to provide great detail, we are in the midst of quite significant discussions with a number of both EV makers and battery makers who are very interested. Our site's open for visits. We have been traveling the world visiting their headquarters as well. So there's a lot of discussions. I think there's been a lot of other deals announced in the market. So it's a hot time. Interestingly, with I guess partners that are sort of non-traditional, having conversations with EV makers and battery makers is not something miners are used to doing. So we're all sort of, I wouldn't say we're inventing the wheel, but we're certainly in uncharted territory with these type of discussions, and that's why they take time and a lot of effort.
But there seems to be, if I look at sort of the lithium space where we've seen likes of Ford and GM kind of step in, and obviously Tesla too, and lots of other battery metals companies are having conversations with OEMs and battery manufacturers at the moment, and at least getting some form of MOU, whether it be binding or not, in place at a sort of earlier stages than, as you say, historically they have wanted to. So, do you not feel that would give some level of comfort to the market if you were able to do that within the before the DFS comes along? Is that something that you're working towards? I hear you having conversations, but you must have sort of deliverables at board level, which you're saying we must get the following things in place, and if so, what are they?
Oh, we're definitely actively doing that, and of course, something like that would certainly, I think, embolden investors. A lot of these tie-ups that you see are, as you said, MOUs or non-binding agreements, and that just is really just a handshake and a promise to deliver a potential product several years down the road, often is the case. For us, our product is our only asset. We're not going to give that away. That's something that we're happy to enter into a partnership with someone who's willing to be a part of that growth for us. So not giving away the asset that easily, Matthew, but certainly there's a lot of people who are having a very close look at it.
Right. Okay. So it's kind of a case of bear with us. It's all in hand. We're having the right conversations. The demonstration plant is open for business 24/7. What else have I got to look forward to? What's going to give me confidence?
Well, beyond, again, those are the things that are in control. Those are things that we've told the market that we're going to do, and that's what we're going to continue to do. I'd say probably the other advantage that we have is just because of the status that we have in Australia, getting granted major project status. We're in great favor with both state and federal government. So we're spending a lot of time speaking to people relevant there. We're invited basically to the table for a number of discussions because of the things that I've discussed, because of where we're at in terms of our journey as a developing company, and the fact that we're in direct talk with battery makers and EV makers. So having that type of relationship with the government is super helpful. We were just on a trade mission last week to Korea. We were, as you know, we were on one of those to the U.S. as well. So it's just something that I guess having that type of relationship with the government and the sector puts us in a prime position to really understand the trends. And so as we get closer to developing the project and our product, we'll be very well placed to understand, have a great understanding of what the market needs and is looking for.
Right. Okay. So would you consider yourself a contrarian's investment, given the 108 year high, 68 cents today? You're obviously discounted to your year high, as are most people. But why do you get to come out the other side? And why have you got a better chance of success than others?
I think it's just because of the major reason is the amount of investment, both monetary and just time, that we've spent on our demonstration plant and training our people and traveling the world and speaking with governments, speaking with industry. I just don't think there are many people that are in that sort of position, many organizations that are in that position and this close to really delivering on a concrete project. So I think that at the same time we're valued like a number of other companies that are perhaps several stages behind us. So I think that in that sense we're undervalued, and it's a great entry point.